All right, in this example, we're going to go over the live charts of supply and demand. All right, so as we see this diagram here, there's a bunch of supply and a bunch of demand going on. Let's start on the major structure form, okay? When price is going bearish, here's the major structure going down, right? Price is going bearish, pulling back, going bearish again, all right? This example here, all right, as you can see, this example here is supply in the markets. Now, as I mentioned, supply and demand are just extensions in the market where price overextends really quickly and then starts to retrace. The retracement is that pullback, okay? So the way that you can find supply in this case is really just your previous high, and then you would mark your previous low to then find and wait for potential moves to retrace and then break that low like this, okay? Once this low has been broken, let's say once price extended back, mitigated, broke below like this, now we can deem this as a new area where supply has left, okay? And then this would be the area where we can look for potential retracements for price to come back and then take off from there, okay? So again, supply is just an area where price is overextending. As you can see, this little piece of diagram right here, you can see that bears have been trying to go up. The demand, there was some demand that was trying to push prices high, but nothing exceeded above this high here, okay? There's a high and there's a low here. So essentially, demand was trying to break above this high, wasn't capable of succeeding, then all of a sudden so much supply has dumped inside the market, and now price needed to pull back to come back to give other traders, other retail traders as ourselves, to get a chance to come and sell off with the appropriate supply that is given back to buyers. Buyers are buying, right? Sellers are going to come back to take price bearish again. Okay, this happens all the time in the markets, as you see. All right, so let's start with this area here. Okay, major structure has ended. Here we are. We're going to focus on the minor and subs. As you see over here, again, the high has been broken, okay, by this extension. We have the green representing the demand levels in the market. So you can clearly see here demand has broken above the last part of supply, the last high of that supply. There was no more supply in here that the markets are looking to go bearish at this point, because you can see this high here is higher than this previous high. So essentially, there's more demand than there is supply in this area. Supply and demand areas are areas where essentially when price extends, we're going to talk about when price retraces, where you need to be targeting that last supply or last demand. Okay, essentially what you're seeing here, these little pink blocks here, are the last minuscule substructure. Okay, substructure high and substructure low before the minor structure broke above, then retrace back to this last minuscule sub high and sub low. So as you can see here, clearly when we were bearish, you can see everything's bearish. There was our last high and our last low. When price extended, when there was so much demand in the area, okay, when the demand happened, price had to retrace back to the last area of supply, okay, and then essentially mitigate this last position here, because there was so much there's so much demand that banks are saying, okay, well, we need to give other traders a fair amount, a fair trade, take a fair buys potentially, or at and around this level to take prices back high. Now notice here where there's different types of buyers that are happening in the markets. Okay, there is 1, 2, 3, 4, 5 buyers, 5 different type of buyers that bought at different levels. Okay, so you can see that there's a lot of interest in the markets, obviously, when there's buyers trying to buy the market, but they're buying the market at different prices at different times, right? And this is where that buy low, sell high comes into play. Obviously, this is not a low when price is just extended. Okay, demand. There's so much demand here that price now needs to pull back and restart and give other retail traders like ourselves the opportunity to enter in at a fair price. Okay, so that's what supply and demand is. Okay, essentially, when price overextends, we're given the fair chance by the banks and institutions to come and enter at a good price. Okay, and you can see other buyers have tried to buy this market at a fair price on their own, at their own skill of their own analyzing. Okay, but as we all understand, buying low is at the lowest area, about 80 to 90% retracement before price takes off. Price comes and tests this last supply level. Okay, and we're seeing if the we're seeing if this demand level can hold. Okay, because there's so much demand here. Once supply comes back, we want to expect as a trader to not have the markets break below this supply level. Okay, we want this demand zone to hold its position, to not let suppliers drive price down. So what happens in here instead? You can see that once suppliers took over this control, picture this not even being here. Okay, picture that this is where we are currently in the markets. All right, if suppliers had their own way, they could have broken below this low here, and then potentially retraced back to then push price even lower. Now you can tell suppliers are in control because they broke that last higher low, or that last demand, the last part of demand, the higher low of demand, to take prices low. Okay, so this is how you can find out when prices are retracing. We don't want to act too fast, right away. We want to scope out this area and make sure that demand holds right here at this demand zone. Okay, and the way you can see this is by seeing how now the minuscule substructure and the minuscule minor structure are exchanging orders in here. You can see how supply took over. Okay, then supply tried to react from this area here. All right, supply wasn't able to push price even to this low. Okay, it wasn't able to push price this low. Okay, it just stopped here about 50% of the way in the 50% equilibrium, because now there's 50% buyers and 50% sellers in this market, as you see here. Okay, this is a tool that I use where that red line, we go from the low to the high, and you can see it's right at the 50% area, 50% equilibrium. So you can see there's a fair amount of equal buyers and sellers happening here. There's sellers here, and then there's buyers here. Sellers are trying to take. There's buyers coming in here, until you notice buyers broke above that previous last high. Okay, look over here. Look right here. This is where that last high was created. If you look at the minuscule substructure, right? It's going all the way down, high, low. This high wasn't able to take out this high just yet. In fact, it tried to push down. It wasn't able to do so until price, then the extension here, the demand took over. Okay, so there was more demand here now. Now this is clear to see that demand is in control. Where's the last high and last low in this market? Well, here it is, high and low. Now we can wait for prices to come and retrace back to the area of demand here. Okay, right over here. And now what we want to see is prices for us to buy in this area. Okay, you can obviously buy right now if you want, or as a smart money concept trader would just patiently wait for prices to exchange, for prices to then push back up. Okay, again, you can see equal amount of sellers and buyers in here. There's more supply here, and then there's demand. It's about same. There's demand, same amount of supply here and then same amount of demand, okay? Prices aren't going anywhere here. The buyers and sellers are happy right now with each other until supply tried to take over, and then demand just demolished the suppliers by breaking a new high, okay? Breaking a new high here, right? So again, when you see prices retrace, that's when you can see that this retracement here needs to come and respect this low. We don't want the sellers to take control. We want the buyers to stay firm here and to take control of this move, okay? Essentially, we're looking for the next extension in the market to push price even higher, okay? And that's how supply and demand works. Now, if you zoom out, you can clearly see that demand is in control because demand is going up, supply, there's a little bit of supply, right? Demand is going up, a little bit of supply. More demand, less supply, more demand, a little bit of supply. And then you can see it here, more demand, right? It just skyrocketed again. So you can see that this is a demand market right now. Suppliers are never in control at all in this market. So let's continue further. Okay, now this is a very interesting scenario. This scenario here has an area where suppliers are taking over right away, and you can see it by understanding each your higher and your low at each each high and low. Essentially, right here, you can see that we made a high, a low, and then a high. Right? You can see the extension went up fast, and then now you can see the supply took over demand. This is a good indication that supply is about to start taking over this market, right? Essentially, when supply takes over, we wait for that retracement, and you can see demand is trying to take over this supply area. Unfortunately, demand is pretty weak. We see that demand is being pushed aside as suppliers step in. Suppliers know that there is more supply now than demand. So if you understand as a smart money concept trader or as any kind of trader, understand that if you see multiple lows, you can definitely see in this area that supply is taken over. Okay, if we zoom out for a second, you can also see that in reality on our major structure, supply is still in control. Okay, you can see that because there's a lot of supply that was that extended. Then the buyers who are interested in buying this next supply zone, the buyers are starting to retrace, to come back, buying all that supply. So essentially, everyone who sold off here sold their orders. All the buyers are saying, I'll take all those orders, thank you very much, and I will start pushing price back up like this, okay? So let's just say there was 10 apples that were sold. Now buyers are trying to buy, or I'm sorry, there's 10 available apples in the store right now, and then all these apples are available, so there's 10 buyers, there's more than 10 buyers, but there's going to be more buyers here than sellers trying to buy this apple. There's more demand, so there's 10 apples left, but there's 100 available people that are looking to buy this part of demand, right? This part of supply that was given. Fortunately, when we get to this high, there's not enough supply anymore. Okay, this is the last area of supply. I'm sorry, this is the last area of demand. Okay, because there's no more supply left in the market. So what does the market do now? Well, supply is like, okay, well, we have more supply. We're going to pump in more, give you more apples. Okay, and this time we're going to give you 10 apples for each extension, meaning, okay, 10 apples here. Okay, buyers are trying to buy. Okay, we're going to give you maybe 20 now more apples for each extension. As you know, buyers are decreasing because buyers are fulfilled with their apple providing. Okay, with the apple supply. Okay, there's no more. Think about this. For example, during the summer when apples are growing, okay, there's a lot of demand. They gobble it up right fast. Like here we go. The apples here are given out, right, to every store. There's so much demand, buying. They happen to buy so much of that supply. The supply is like, okay, well, there's still more supply, but all these buyers are so full with all these apples that they're thinking to themselves, okay, well, I bought 100 apples every week. Now I'll buy 10 a week. Okay, so supply's taken over. It's still summertime. There's buyers here trying to buy apples in about 10. Okay, there's more supply coming in, in the store. More buyers are interested. Some buyers are interested in buying some more apples. All right, there's more supply coming in again from these stores, right? Some buyers are coming in again until more supply just starts to derail and say, okay, we have a ton of supply. We can't hold all the supply. Some of the supply is going to go bad, right? So what do we do? Demand starts to take over because now it's winter time. There's not a lot of apples to buy, and there's more demand coming in now to take all this, all the apples that are left, right? And essentially, from this area, price can start shooting up where it can show more demand for apples, right? So that's just a quick scenario. I wanted to show you how it worked here, right? As you can zoom out and look at this for yourself, we can see that we had a high broken here. The extension, the demand broke above this last area of supply, hence as to why this area here mitigated right over here, okay, and started shooting price up because of demand being so big in the market. All right, and so prices had to come back here to test the last area of supply to see if there more supply. Can we give more supply here and break this next low to continue the supply structure? Okay, and unfortunately there isn't, because demand took over that supply and said we want to take all your supply because now it's winter time, right? Essentially, we want to see the market break above this high to really see if the buyers are if the buyers are actually wanting more of these apples, right? So that was a quick little explanation. I wanted to show you guys how that worked. Back to this example. All right, you can see here clearly sellers have switched. Right now, there's more supply than demand. All right, each time price is retracing, there's not enough demand to take over the supply. All right, so every high and every low is essentially your supply and demand. Okay, and just wait. All you need to do is wait for price to retrace. Wait for the last low and high to come up to the last low and high. Retrace in there. Wait for the markets to pause in there to start switching their orders. Wait for the supply and demand to decide whether they're going to go up or down, right? You can see here we have an equal amount of buyers and sellers. Again, this is an equilibrium, an area where price is consolidating, where all the buyers and sellers are so happy with each other. They're happy exchanging, their currencies together, right? Happy exchanging supply and demand in here until supply took over and said no more of this. We're ready to reverse the markets now. Once supply broke over, we need to wait for price to retrace to come and close our previous high, the last up move or the last up candle in this area. Okay, before supply takes over again. You can see there was a little bit amount of demand in wanting to push price even higher. But when prices get to this level, we want to see if supply can still hold this level, this zone. And if supply can do it, we can look for potential areas where supply can take over now, and we can enter the markets to sell off all our orders. Okay, so that is essentially what supply and demand is in the markets. Again, you don't have to trade everything in the markets because everything is not tradable in the markets. The only way you can find out if you should trade the market or not, or in this case, the only way to find out if you should trade the markets is just waiting for a clean cut above the previous high or the previous low, like here. Okay, that's all we know in terms of how much there's demand or how much more supply is there in the markets. That just tells us and confirms us, hey, price is this high. That must mean that, my goodness, there's so many buyers in the market. We must wait for prices to fall now. We must wait for prices to fall so we can buy the supply at a good price. Okay, I don't want to buy the apple at $10. I want to buy the apple at $2. Okay, like Honeycrisp apples or whatever, right? And then buy apples at $2. Then prices start shooting up because people know that they should buy prices at a very low cost. Why would you buy an apple at $10 up here when you can buy an apple at $2 per apple? And then that's when all that demand shows, all the people's interest. All the interest shows here at a lower level, never at a higher level, right? So once demand shows, you see a lot of buyers like ourselves buying quickly because we want to be in there. We want to buy price at a low price, at a low cost. Once we see prices retrace, again, we just want to buy prices at a good price. We don't want to buy prices here. We don't want to buy an apple at this level, or at this level, or at this level, or at this level. Okay, we want to wait patiently for price to pull back and retrace back to that last. Area of the high and the low, last sell order that happened. Okay, there was a sell order that happened here before price extended quickly. All right, because there was so much great of demand here. Price touches that last sell order, like here. Okay, and then price looks to take off again because now all the buyers are saying that's a good price. Okay, and we're looking for another rapid extension here. Okay, because there's thousands of buyers that are interested in buying an apple at $2 here, as an opposed to $10 here. Okay, it's just the way the markets work. Buy low, sell high. Okay, see a huge extension in the market like this. This signifies us that there's strength in the market, that there's so many buyers interested in the market. Okay, see an extension like this below the last buying order here. That means there's a lot of sellers interested to sell all their supply. We don't want the apples anymore, or what have you. Or maybe there's more supply, like more apples, and then less buyers, right? A lot of buyers don't want to buy apples anymore. They're too stuffed or whatever. Okay, this is how it all works. So go to your charts, make sure you mark out your supply and demand. Okay, and you'll see how clear these levels are for us traders. Okay, one last thing I want to leave you with this, all right, is whenever demand is taken over, always wait for that retracement. Wait for the markets to come back down to your last sell order. Okay, here we go. Demand took over. There's our last sell order in pink right there. Okay, demand took over. Look at where our last sell order is right there. Price came back to it and took off. Look where our last sell order is. All right, wait patiently for the market to come back to that order, and this is where price reacted. As you can see, price was bearish, starting to be bearish, right? You can see supply has been starting to push prices low, so it's only expected for prices to potentially push even lower here, right? That's what it is. Just wait patiently for supply to show, and then wait for prices to push back. All these supply and demand levels are essentially footprints in the markets, which we'll talk about in another video, but they're all footprints. They're showing us their cards first before we even play. All right, so go over the market and try this exercise out. Mark every supply and demand out, and once you do so, you'll see how clear the market is in terms of where to buy and where to sell. We'll see you guys in the next video.